Hi, everyone, and welcome to the first of our webinar series that we're doing in partnership with IGI, International Gemological Institute. And I want to welcome you. Thank you for taking time out of your busy days and busy schedule to join our discussion. I'm really looking forward to this this webinar. Have been for a while, and because it's been such a hot topic for some time, and I think we're approaching it in a bit of a different angle, and I'll explain a bit more about that when we get started. First, I want to introduce our panelists and thank them each for joining us on our webinar. As you'll see, they are a esteemed group of people who are in the lab-grown space. In alphabetical order. So I want to welcome Amish Shah, who's the president of Altr Created Diamonds. Thanks so much for joining us, Amish.
Thank you for the invite.
And Avi Levy is the president for North America at IGI. It's great to see you again, Avi. Welcome.
Thank you very much. Good to see you. Happy to be here.
And thirdly, Marty Hurwitz is the CEO and founder of the MVEYE, which, correct me if I'm wrong, Marty, is kind of a consulting firm to the lab-grown industry.
Yes, great to be with you. Thank you.
And last but certainly not least, Nick Smart, who is the commercial director at Lightbox Jewelry. It's great to have you with us, Nick.
Hi, everyone, and thanks for the invite.
Okay, so firstly, I want to give a shout out to our sponsors, which is, as I mentioned, IGI. So this webinar is brought to you by the International Gemological Institute. For 45 years, IGI has provided the fine jewelry community and consumers with a broad range of services, including natural and lab-grown diamond reports, colored stone grading and origin reports, jewelry identification and appraisal reports, in addition to natural and lab-grown diamond screening. Regardless of location and marketplace, an authentic IGI laboratory report is the common language of trust and confidence in the gemological world. So thank you, IGI, for your sponsorship, and we will be holding 2 more webinars in this series. I think it's in September and October, so look out for that on all your social media channels. Okay, so we're going to get started. By way of introduction, when we were discussing on an editorial level how we would approach this idea of lab-grown diamonds, the topic has been debated very extensively within the industry, within both the lab-grown and natural industries, about how one plays off against the other. It's become a debate about natural versus lab grown. And so we thought we'd approach it in a different angle and hear from the lab grown sector itself how they see the market evolving. And I think it's an interesting time for the lab grown sector because there's been a growth spurt in the last few years. And we want to understand what has driven that. And if I just share my screen for a minute, is my screen showing? Yeah.
Yep.
We ran an article on the in the June issue of the Rapaport magazine, a series of articles actually, but the one that I worked on was looking at where the lab-grown market is at the moment. And excuse this this title, it's not correct, but looking at the famous sort of looking at the famous graph by Geoffrey Moore, who was an economist in the early 90s and wrote a book called Crossing the Chasm. He looked at how innovation evolves over time. And he plotted it that there are the early innovators, and then there are the early adopters, and then the market evolves with the early majority taking on that innovation, and then there's the late majority who come on board, and then there's always the laggards and also the refusers who don't come on board at all. And I would argue that I think that the that's that period between the early adopters and the early majority is where a lot of technology and a lot of innovation kind of fails. And that's called the chasm. That's where they kind of fall into this abyss where the innovation falls flat. But I think that at this stage now that lab grown has crossed that chasm and is in this early majority stage where we now see a greater acceptance of lab grown across the industry, across all parts of the industry, from mining companies that are involved to more manufacturers, that typically natural diamond manufacturers who have gone into lab grown, and then certainly at a retail level as well. So I guess the first question that we should ask ourselves is what has motivated that change? What has driven the development of lab grown in recent years that has enabled it to cross the chasm? And I think, Marty, I'd like to start with you in posing that question to you. From your point of view, what is driving this spurt in acceptance of the lab grown market?
From my perspective, the major driver and the major expediter of the whole lab-grown evolution is the consumer, because the consumer is hearing about this product organically, quite interested in it, and without much marketing money being spent on them in a macro sense, they are organically walking into stores or visiting websites or reading news articles to learn more about it, and they're asking about it. And sometime in the last 24 months, that flow of consumers turned into a tidal wave. And this has driven more and more retailers to say they wanted to carry it, and we've crossed that chasm now. I think you've identified that correctly. And now even the industry gatekeepers, the doubters, see these consumers and really want to serve them and help them and profit from them, and that's what's pushing things very quickly now.
Well, Amish, I mean, I take the point, but I think it could be argued that there's still a lot of it's still in its early stages, and consumers there isn't that widespread awareness, and maybe it's driven from the trade that's pushing this alternative to the consumer. How do you see that playing out over the last few years?
The way I see it is in two parts. There's a consumer side, and then there's the trade side. If you start with the consumer side, when you look at it today, if I look at the trajectory from 16 to 22, a socially, environmentally, and very importantly, economically conscious consumer has a choice now. They have a choice to get almost twice the size of a diamond for almost the same price or little more. America is all about size. Over 2/3 or almost 80% of the sales of lab-grown diamonds, and the way the category is getting established day by day, it's getting stronger, because for the consumer, it's about the size and the beauty of the diamond. This is the underlying factor that we have studied through stores, not only in America, be it Australia, be it Europe, anywhere. When it comes to the retailer, this gets further supported. The retailer is looking at their pockets. When you look at earth mine diamonds, when their margins were between high 20s, mid 30s, they bring in lab-grown diamonds in their stores. Number one, their closing ratio goes up because they're offering a choice. The second part that happens is lab-grown diamonds started moving their margins up from as low as mid 50s or even early 50s to as much as mid 60s. You're talking an increase of margin by almost 30 to 40%. So your closing ratio going up, your turn getting better, and you're making a higher margin. The other side, the consumer that's walking in the store is getting a larger diamond and walks out happy. This is the perfect storm that is making this category explode.
Well, I mean, it can be argued then that that higher margin is what's driving retailers to push the awareness of lab grown, which I guess is fine. And so again, that it's the trade that has pushed this growth, and the lab grown sector itself has, within reason and quite understandably, been pushing the product that has now reached this point where there's a wider acceptance both within the trade and among consumers. I mean, Avi, how much of that sort of margin play is what is attracting the trade to the lab grown product, in your opinion? That and is it sustainable? Is that something that's with this influx of companies within the B2B market, that they will stick around if and when and if the margins diminish?
Well, I just want to go back for a second, if I can, to the question. The original question is what's driving this? To add on to what Marty and Amish said, yes, I think it starts with the consumer, but I think it's time that we understand the full circle is happening here, right? It starts with the consumer, goes to the retailer, manufacturer, grower. I think everyone has done their part to kind of push this business forward, right? We started out small, we kind of felt what was going on. Like Amish said, the prices started coming, there was more money being made, less now, but everyone has gotten behind it. Everyone is pushing the message. The consumer is going to the retailer, wanting the merchandise. The retailer is going back to their suppliers, demanding the merchandise. The growers have come through now with much more merchandise. So we're in that whole circle of evolving. And yes, I think we're in the middle innings of this whole game. Regarding the margins and all of that, it's kind of hard for me to kind of say that. I think Amish might be better, or Nick actually might be better to answer some of those questions regarding the margins and how everyone's playing to that.
Right, and I think we will get back to the pricing issue, but I don't know, Nick, if you have any comments on these points.
Sure. Yeah, and it's a great question. I mean, when we talk about the driver here, one thing that sticks in my mind, and I think it's probably a common experience among anybody who's in this space. I think to a dinner party, for example, you tell people what it is that you do. And when you say you grow diamonds in a lab, people are immediately interested. It doesn't really matter where they come from or what they do. And that, is undeniably a good thing and a positive thing. There is a general level of interest that people are, realizing, wow, you can actually do this. It's a fantastic technological achievement. But there's a kind of underlying interest in this, in the fact that you can do it, and people want to see the product, and that carries through to the consumers wanting to know more and wanting to explore this product. So I think a baseline level of general interest in the product. But then secondly, and it's a point that Amish raised as well, which is the quality and the cost of the product. So when you actually put the product in front of a consumer, generally they come away very impressed. The ability, and again, we're on a journey here, as we've mentioned, and I think that's something that we'll touch on again. But already today, what we can produce is quite exceptional in terms of quality, and you're able to get that at an accessible price. So it is a very compelling offering to a consumer, that suddenly you can have something that is got exceptional characteristics, great sparkle, and all the rest of it doesn't break the bank. And all of those are positive things. So I think that at a consumer level is driving a lot of the interest generally.
Well, my understanding is that the quality of the growing and the manufacturing of lab grown has improved quite substantially in the last, I think even just 2 years. And we are seeing companies that are differentiating themselves in their growth and the quality of diamonds that they're able to produce. And so to what extent is that Amish, I'll point this to you, to what extent is that higher quality of goods are consumers aware of, or are retailers aware of, that they can present to their customers?
So just to give you, interestingly, the journey that will help you to understand that. In 2000, if you look at 2016 to 18, where the core conversation used to be HIJK colors from a gemological perspective, today, those same stores are looking to offer EFGH colors or EFG colors. So there's been that movement of colors because, see, the consumer comes with a price. 80% of consumers or more have a price bracket in their mind. And then they have a size idea. Now, with the technological advances, two things have happened. We're able to grow larger on the same plates, and we're able to grow better in terms of the colors that we're able to get. And that is leading to the market space improving the overall colors and sizes they're offering to the consumer at a better value. And it's the simplest thing. As technology advances, the economy of scale and the advancement is being passed on to the consumer as a value. And that's what's happening 16 to 18, 18 to 20, and 2020 to 22. It went from what used to be IJ was the core color. Today, FG is the F is really the median color that everybody wants. And that's the movement. And it's also where, it always was about the 1 carat to the 2 carat is the median size that you start a conversation in the store with. So that's the movement, Avi.
Interesting. I mean, Avi, are you seeing that in your laboratories, in the grading space, that there is a different product that's coming into the labs for grading than 2-3 years ago?
Oh, definitely. A lot of people have stepped it up. It's great to see. Being a fan of the industry, I still get very excited when those beautiful stones come in. Not just 2 carats, we're talking 3, 4, 5 plus sizes coming in. So technology is doing its part. We're seeing in the lab. It's very exciting.
And so Marty, when we think of a large retailer that's offering, with multiple stores, that's offering lab grown, how does this change the narrative for them? Are they able to, does this improve their ability, for example, to get a consistency of supply that they're looking for, to present in their collections of lab grown? And what other factors might play into this?
Well, this is a challenging growth aspect of the explosion that's happening, is that major retailers and major jewelry manufacturers that supply them are challenged to get consistent supply that is required to put collections together and run large campaigns with them. You need quality supply, you need quality product, and you need it consistently every month to the magnitude of thousands of carats every month. And it can't vary. It has to be precise. And the need for that right now is pretty acute because bigger players are, as we've crossed that chasm, as you noted in your early chart, bigger players are now moving into the space very aggressively. And the one thing that's holding them back is consistency of supply that gives them the confidence that they will be able to create larger collections on not just a national, but an international scale. And that is something that they are moving to fix. They are identifying quality prime growers. They are paying higher prices, not just back of wrap prices, not just spot market prices, to ensure consistency of supply allocated to them. In this regard, it's much more of a semiconductor business or a bakery business than it is a diamond trading business. Quality growers will be moving quickly, as some already have, to custom growing to the specific requirements of their bigger, better paying customers. And that allocation is being consumed very rapidly in the current market.
So Marty, then does that not sort of narrow the supply question of, or the supply range that retailers will be looking for and asking and requesting from wholesalers, that the lab grown sector would then narrow into a better quality range of diamonds, and fulfill that consistent demand that the retailer can request from them?
Well, one of the things you noted in that chart after you pass the chasm is a consolidation in the marketplace, and there is consolidation happening as we speak at the growing level and at the wholesaling level. And there's a lot of technological advancements taking place in growing, and there's a full range of quality levels amongst the growers. And so, depending on what type of retailer you are, you have to figure out who has your required product, whether it's good, better, best quality, and who can produce it consistently for you. And you have to align with that grower or that wholesaler very quickly right now, because despite all the trade jargon you hear and all the articles about how it's a technological advancement, it's going to be trickling down in price, the truth of the matter is the consumer demand is progressing so fast that by Q4 of this year, the demand will far outstrip the available growing capacity of the world, all the world's prime growers.
I would like to get back to that point, but before we do that, Nick, in Lightbox's experience, and Lightbox has a very specific range of goods that it grows and produces. Has that been the experience? Because it seems that Lightbox is approaching that supply from a different angle, in that you're setting the quality, and this is the brand that's available to the retailer that's running your goods.
Yeah, sure. I mean, I'm happy to speak to that. I think a number of things that we did there, possibly a little bit differently to some of the other players. One is just sort of standardization in terms of the quality, and standardization in terms of the sizes that we produce. And obviously that gives us some benefits in terms of production, but also some benefits in terms of clear and straightforward communication to the end customer. I mean, I guess I'd like to address one of the things that Marty was saying there. Clearly this space is growing very, very fast, and I think we are in a short-term position where there's this mismatch between supply and demand, and it's going to be very interesting to see how that all plays out, and we're going to have further discussion, no doubt, on this webinar about where we see the long-term future of that coming. But at the same time, there's no doubt that there is significant levels of supply coming through as well. It takes some time, I think, as Amish would state as well, to put in place production capacity. Typically you're looking at 18 to 24 months to build a CVD plant, for example. Particularly in today's construction environment, there are lots of challenges around doing that. Generally in labor, anybody who's building a building or a house, knows what's happening in that space. So that's general. But there is a lot of production coming through. And if you look at things like the GJEPC export data out of India, we're having months now where you're exceeding 130 up to $150 million of product exported wholesale per month, and that is up very significantly from where it was at. So there is a catch up happening on the supply side to demand, and it'll take time to equalize out. But fundamentally, one of the things that is really different here between natural diamonds and lab grown is there isn't really a barrier to how much you can produce. It's just a question of the producers actually catching up to demand, producing what is being demanded out there. Nothing really stops anybody from putting in additional production capacity. There's a capex. You've got to have the technology, you've got to have the know-how, but it's not like going out and building a mine where you have to go and first find the mine, develop it, and you're talking about 10, 20, 30-year projects to bring a mine on stream. Lab grown is very different. You're able to respond more directly, and I think we are just in a short-term period where perhaps there's this mismatch, but over time, those things will even out, and you will have demand there to meet supply, and it will be much more, as Marty said, a semiconductor type business or a bakery industry where you're producing a product that is in demand.
Marty,
sorry, yeah, I sure would. With all due respect, it's not a CapEx issue. It's not who has the money to put up the most chambers. And yes, there's a lot more product coming out of India right now, but not all lab grown is created equal. The biggest differentiator here, and what is really driving the supply side, is that there is a shortage of human scientists at a PhD level that have the technology skills, that are not on-the-job training, that have actual diamond growing experience, that can perfect those chambers to grow better quality product in the most advanced technology. Those chambers that have the best technology are not coming out of the box. You don't buy them at Best Buy. Okay, they are custom built by the world's leading growers, and that takes a very high level of human scientific knowledge, and there is a tremendous shortage of that knowledge available right now. This is not progressing at a quality level as rapidly as the company line would suggest. This is a very intricate process, a very complicated scientific process. It is just not that easy to grow quality, larger lab-grown goods. And that's the differentiation of where the expansion is versus what LVMH wants, or Richemont wants, or any of the luxury good players want before they step into this industry.
Well, I was going to direct a question to Amish. And actually, I think I have two questions for you, Amish, in response to both what Nick and Marty mentioned. There's so much there. The first is that is it a patent issue? That thinking of what Marty said, if there was a sharing of scientific knowledge, then that would overcome that challenge. I would think that if company A is sharing their technology to grow, or how they grow with company B, then it would help to increase the supply. And secondly, Amish, to what extent do you agree with the premise that there is a shortage of supply to satisfy demand this year, and how much of that is a general supply chain issue that the whole world, all industries are facing these supply chain issues with, whether it's an inheritance from COVID or the geopolitical situation at the moment in with Russia, Ukraine, whatever it may be. So how do you read the supply versus demand dynamic at the moment?
So the first part is about, like what Nick and Marty said, about the ability to multifold expand this. When we look at growth today, there's two parts of the world that are really growing the volume, and then there is a little bit here and there sporadic. India and China are the primary growers of goods today around the world. You have China that is producing a major part of the HPHD and a small part of CVD, while India is primarily CVD with a very little of HPHD. So all your smaller goods, which is under 5 millimeter, is coming out of China, where a lot of companies are converting their industrial presses into gem because it costs X amount of money, but it's raising the margin of those presses. So there is that conversion that is happening at a certain speed. As time has passed, they're also getting comfortable producing larger sizes. So there's a larger volume of HPHD, which is under 2-carat polish, that is coming out of China as rough, that is finally ending up in India to cut and polish. The CVD growing in China, which is was very, very small, some 50, 100 units. Today is around 600 plus systems already in China. And based on the projected growth in the money that is put in, just like what Nick said, yes, it's taking between a year and a two, also because of the overall supply chain, getting the systems, modifying them, will be about 5 times in the next 3 years just in China. When we talk of India, India is operating over 2,500 CVD systems at this time already. Over and above that, if you look at the orders that have been placed by either people who put in money as well as their existing growers, this will double up in the next 2 to 3 years. So you're looking at a approximately growth of about 3 times the production plus technology, so 3 to 4 times the production that will grow up much faster. So there is one part, which is the current point of time that do we have a crunch? And one is expansion. When we talk about the part of the scientists and that, yes, that does play a role. But when I look at it from the perspective of India, once you perfect growing, it's all about how fast can you expand your capacity to add more equipment, which is buying the systems and then going into modification. At the about 7-8 million carats, we'll probably hit probably 25 million carats in the next 3 to 4 years, hopefully based on how I see the systems grow. It's still only going to be a small percentage of the goods as compared to the overall diamond market space. So is there a shortage? I would say it's more on the median side. I wouldn't say there's a major shortage because the truth is it is not being run by PhD engineers. You know, most of the Indian manufacturers, nobody has PhDs on staff. Those are all CTOs that have perfected the systems, and one CTO moves from one place to the other. That's the way of life. And these systems are getting put in place. China is doing its own thing there. I know less. I just know the growers on a personal level to know that HPHT industrial is being converted to GEM. And there's a couple of growers that have a very strong backing that are going exponential. The current position, I'm in absolute sync with Marty. What's happening is that the consumer acceptance rate, which every analyst has been beaten statistically, is growing at a much higher pace. You have a consumer who's looking for a larger diamond for the same price. So that's the conversion. And you're also opening up to a demographic that never bought diamonds. You know, these are the two consumers. And with now fine jewelry entering into the market space, which is where you have an influx that is you're going to see, you're almost going to add another $2-3 billion in the next 3 years max. It's less than 3 years, I see that influx. So you're going to hit that middle line whereby you're going to see the crunch. And the other part that Marty said is absolutely right. We are seeing this as a prime grower. What we see is that not only wholesalers, retailers are directly working with growers, locking their needs for long-term supply. And the qualities are being grouped in because, of course, you can't get, while everybody thinks this is 3D printing, it doesn't come out straight Fs or straight Gs. Their most important thing is to get a consistent supply. And that's why, retailers used to speak to wholesalers who went to distributors and came to the grower, are now speaking with the growers, locking their supplies, anything from 3, 6, up to 12 months, and even locking to the point saying, okay, for every system, let's assume you have 20 systems, they'll say, okay, I will lock the production for 10 systems. So the way the deals are being done has completely changed. From the wraps, they're going to the point of, okay, how much for the production per month for a system? So there's all different types of deals, and I know we're going to talk about price in that, but that's what's happening out today.
Okay, interesting. Before I turn to Avi, I would like to give maybe Marty a chance to respond. And my thinking, having spoken to Marty, spoken to you before, is that there are different markets and different segments within the lab-grown space. There are those mass producers in China and India, but then there are those higher quality, maybe niche, I don't know, but maybe, that higher quality grower, we know 1 or 2 in Israel, in America for sure, that are maybe targeting a different side of the market. And maybe that's where the shortage of scientists is playing out. How would you respond to that, Marty?
I think it's an absolutely gigantic market. I think we're in the infancy of the gem product in lab-grown diamonds. I think consumer demand is growing exponentially, and I think gem quality diamonds are not the only thing that prime lab-grown diamond growers can grow. They have opportunities in scientific materials, advanced materials, industrial materials. But every time you change a chamber to do something else, it takes 6 months to configure it. And it takes a lot of wisdom and human capital to figure out how to do that. And so if you want to do research and development in quantum computing, for example, that's great. But you got to shut down a bunch of chambers to do that research and development and have no revenue from them. Meanwhile, people are throwing money at you in the gem quality product to tell you to produce more so they can get your output. So there's a lot of different opportunities. There's a lot of different growers. There's a huge amount of consumer demand, and we're just in the infancy of it. So there's a lot of things going on here. It's a very complex market, but it's not, my point was only, it's not just about capital and putting up as many chambers as you can. There's a lot more complexity to it. It's really hard to grow this stuff, and it's really new technology, and not everybody has the latest technology. It's all custom built as it goes.
Sorry,
Amish, yeah.
I did want to say something here, which is important. I think there is this perception they feel where if the goods are grown in Israel or they're grown in US, the quality of the crystal is finer. I think this is purely a perception, because the growth, yes, depending on the level of tech that companies have, the quality does vary, be it the inclusion type or especially the colors they're able to get. But when it comes to the crystal growth, what is grown in Israel to what is grown in China to what is grown in India to US has really no difference scientifically. So yes, the qualities can vary, imperfections can vary, but it should never be misunderstood that the production, which is almost the majority of the production that's hitting the market, from the largest of the sizes that Avi from IGI graded, which is the 30-carat diamond, to the majority of the production that's coming in the marketplace in the higher qualities is grown in a specific lane. Where the better is grown there and India's putting out lower production, I think there shouldn't be that perception in the marketplace based on the role.
Sorry, I did not mean to imply that. I think
neither did I.
There are very fine growers all over the world, and there are very poor growers all over the world, and we're going to need all of them to lift their game and get better because the demand is increasing so quickly.
And thank you, Amish, for pointing that out. And it was me who I think fell into that trap. But I think there is that perception because of the size of the manufacturing sector in India, in particular, and in China, that the majority of the sort of mass market generic product is coming out of that out of those centers. But I appreciate your clarification.
No, I just
So Avi, you're in a unique position at IGI. My understanding is that you are the largest grader of lab grown, and so you are seeing the different types of product that are coming into the market and coming through your grading labs. And so, similar to my previous question to you, but is there a difference in how you're seeing the type of product that's coming in and from different centers, maybe relating to the previous point?
Yeah, so we're definitely seeing a range of qualities coming in from everywhere. It is, and it's growing. The way we understand it is that there's got to be a level of consistency to the growth, right? There are timetables, time factors, different recipes that have to be adhered to, right? So it is very intricate in detail to put it together, right? The more a company or a grower puts their attention to it, probably the better the quality will come out. Would you say that, guys? I mean, if it's scientific or all of that, right? You have to put in the time, put in the effort, and we're seeing the results come out. So yes, at the lab, we're seeing a varied amount of qualities. We do see a range, better down to lower colors as well. I think it just goes back to how the growers and manufacturers are putting it together. It's interesting how Marty was saying about you have to find the right suppliers, get the right consistency. It kind of takes me back to when I was buying natural diamonds. It's the same thing. You have to find consistency in what you're doing. You have to align yourself with the people that you want to align yourself with. There are a lot of commercial qualities coming out, and there is still a need for it on the market from what we understand. So right now there is this big range. It's all kind of coming to market. The consumers are taking it in. They're asking questions. They're calling us and asking us also about lab grown still. They want to know more. We're giving as much information as possible. I think we're in the middle of a great phenomenon. And like Marty said, yeah, it's still early stages and we have a long way to go.
And then IGI is also grading finished jewelry.
Yes.
And I'm interested to hear from you if you're noticing any changes in the trends of design and finished jewelry that's using lab grown, that's coming through your laboratories.
Yes.
As we've mentioned in private conversations, there seems to be development in that sense as well, and that's another indicator maybe of that the market is maturing.
Definitely, there's tremendous development. It's coming from all areas, from the commercial sector to designer level as well. The past few months, we've seen tremendous growth and vendors coming in and showing new collections and asking for different collaborations and ideas. The lab grown has really spurred the market. It's really done its job that way. It came on, we didn't know where it was going. We knew it had a tremendous value proposition, but the industry has really jumped in and pushed it. We're seeing new programs on the commercial to the brick and mortars, like I said, to designers coming up with different ideas. So it's stretching, and that's what we want as an industry. We want to go from lower price points to higher price points. We want to drive creativity. We want to feed our customers, our consumers with new products. And that's exactly what's going on today. So it's great to see.
And Nick, we've seen that over time, Lightbox has expanded its presentation of both loose stones and of its jewelry. And so, what is driving that? Is that a reflection of the as I said earlier, the maturation of the market?
Yes, absolutely. I mean, I just wanted to echo what Avi was saying there. One of the, I think, real possibilities of lab grown lie in this design space, the design and innovation space, particularly around jewelry. It's about exploring what you can do with this product that is new and unique and will drive customer interest, customer novelty, be able to bring new things into the store. There's a whole aspect of colors, but even design and cuts and shapes and jewelry possibilities. And I think we're starting to see that, but there's, I think, a lot more to come in this space, and it's a really exciting space to be in.
For sure, sitting in the lab, just to kind of chime in on that, we are seeing more creativity, like I said. If it's colors, the colors are coming out now, blues, pinks, yellows, greens, to different shapes, different cuts, special cuts. The industry is gravitating towards the technology side, seeing what can technology do to help further boost this. Yes, we're producing diamonds, but what else can you do? Is it shapes? Is it colors? Is it sizes? Everyone is jumping into this. There's a lot of enthusiasm going on.
And then that leads to the question of mixing lab grown and natural stones in a piece of jewelry, and the trade, we know, is very, very sensitive to that. I think on both sides, on both the natural and the lab grown side of things. Amish, I think you mentioned to me in the past that the consumer doesn't really matter. And so it doesn't care about that. Sorry, the consumer absolutely matters. But the consumer doesn't, the mixing of lab grown and, say, using a natural center stone and lab grown melee, for example, as in the setting, that's not necessarily a make or break factor for the consumer.
It's very true. If you think the trajectory of the industry from its infancy to where we are today, the first phase was lab-grown diamonds came to the market, and the core conversation was that we need to show value. The value was being seen in the center diamonds. When you look at 2016 to 18, where there were barely any fine jewelry or finished bridal brands, at that time when we came, I know we were the only ones that actually have finished jewelry, all the way going to $100,000 pieces. But when we look at the market space, it was all about the center diamond. So the stores had center diamonds, and then they had semi-mounts from either designers or what they bought from the wholesalers. The consumer has had absolutely no reservation or skepticism in terms of putting a lab-grown diamond in a beautiful earth mined or a lab-grown mounting. This has been the norm from day one. As time has passed, yes, now you're seeing, and it's still very, very small, but I think between last year and the next year, I believe, you're going to see an influx of jewelry manufacturers that are now trying to make bridles with lab-grown MVEYE. And that's what happened with lab-grown MVEYE. You know, if you look at 2016 to 19, lab-grown MVEYE was almost like nobody was interested. It was supply with little demand. Lab-grown MVEYE right now, between supply and demand, it's interesting. If you look at the price matrix of different sizes under 18 pointers from August 2021 to July 2022, there's an average price increase of 70% on the MVEYE prices. And this is not because suddenly the MVEYE supply got cut. MVEYE supply actually went up. The demand has gone multifold. You know, you're talking about bands. The category of bracelets and necklaces, tennis necklaces, which almost didn't exist in the mind because it was unaffordable, had come back. So one part where you said, yes, is the consumer has absolutely no resistance in using a lab-grown diamond in a earth-mined diamond mounting. That has been from day one. This is now evolving into finished bridles that are fully made of lab-grown diamonds with or without recycled gold and are still continuing the old way. But this is now evolving into an entire segment of jewelry category in bridals and fine and creative fine jewelry, as you will see. So there's this evolution is lab-grown diamonds is bringing a major innovation in diamonds. And like what Avi and Nick said, you know, you have colors. You're talking about colors and cuts. Designer diamonds, and this is the whole interesting part that I see coming in. Your one side is jewelry designs. Now it's about designing diamonds, because lab-grown diamonds gives you the ability to actually completely design diamonds to what you want. Because at the end, we forget as an industry, finished jewelry is actually the product. Diamonds are only a component.
There's a lot there, and Nick, I'd like to give you the opportunity to respond. Before we do that, I see there's a lot of discussion in the chat, which is fantastic and really wonderful. If you have any questions, this is to people in the audience, please put them in the Q&A, and we will have time for questions towards the end of the webinar, and I will take the questions from the Q&A section. Not from the chat, but please continue to engage with each other. I'm sure there's a fascinating undercurrent discussion going on there. Amish, you said I think a lot of controversial things there, and I think it brings up a number of challenges that the industry would face as well, particularly in the area of disclosure. But Nick, I have a feeling that that you have some thoughts on this idea of design being expanded, jewelry design being expanded to include both natural and lab-grown product.
Yeah, I think just obviously just to state from the outset, you know, Lightbox is 100% lab-grown. That is what the brand is built on. I think the point that you raised there is particularly relevant, which is the disclosure piece. I think that the biggest challenge that you've got when you start mixing products within the same piece of jewelry is how you adequately communicate that through to your end consumer, because that's the biggest danger there, that you sell a piece of jewelry which is some part lab grown, some part natural. What is it that the consumer is buying? Are they completely clear about what they're getting? If you manage to do that, then and they entirely understand what it is that they're getting, then yes, in theory that should be fine. But I think that you generally do have a challenge there where you say using a semi-mount that's using natural diamonds, you've got a lab-grown center that's gone into that. I think you have a big risk there around confusion with your customer, and that's I think something that has to be driven. The melee lab-grown space is interesting because I think you probably are at this point now where there's actually relatively little economic difference between natural lab-grown, natural melee and lab-grown melee, which is sort of driving this interesting space where you potentially are seeing people continue to use natural melee even in lab-grown designs. But certainly, I think the preferable situation there is to design a piece of jewelry that uses lab-grown stones that is sold to a customer, and they know what it is that they're getting, and then at the same time you can celebrate your natural piece, and it is going to a consumer who again knows what they're doing. So I think the key there really is disclosure. Does the customer know exactly what they're getting?
Avi, you're nodding your head, and I mean, firstly, are you seeing more of that sort of? Are you seeing that mixing of product in the jewelry that's coming through the lab, and then how do you ensure that that disclosure, particularly on the melee, which is really, I think, facing an interesting time at the moment, but we'll get to that.
Disclosure is what it's all about, and that's what we do here, right? Pieces are coming in, we will fully grade them, we will screen them. We're currently screening for some top luxury brands across the world who are more on the natural side, who are still looking to make sure that goods aren't mixed. So there are players who want to make sure, I shouldn't say that, mostly everybody wants to make sure it's not mixed unless it's on purpose, right? It's what Amish said. I think we are starting to see more people mixing and disclosing. They're telling us, we're checking back here to make sure it is what it is. And I think maybe it's more on just a guess, maybe some more on the design side or the marketing side. People are just trying to market things differently. Regarding the price difference, I'm not so sure about that, but I still think there is a big price difference unless we're talking about lower price naturals compared to the melee prices. But in terms of disclosure and transparency, that's what we do. We'll make sure to tell the consumer, to tell the retailer what is in that jewelry. And yes, we are seeing more melee coming, more basic jewelry. If it's bracelets, fashion rings, it's coming. And people still want to know what is in their piece of jewelry. And we'll state it on the report so the customer will know finally what is in there.
Okay, and so do you have reports that will say the center stone is natural and the surrounding surrounding setting is lab grown?
Right. So either way and every way, I think we're seeing probably more lab grown centers and natural melee, but you will get that mix from time to time that different jewelers are putting it together. Right. We're not only dealing with the big boys, with the big commercial stores. There are individual designers or manufacturers who are doing things differently. But at IGI, we will make sure to tell on the report what is natural and what is lab grown. That's
okay. Sure. Marty, I think that the melee, the lab grown melee market and in relation to the natural melee market has surprised somewhat, because that was the area that initial forecast really, that's where lab grown was really going to sort of cannibalize the natural market and where the growth was projected to be. And it's not clear that that's been the case. In fact, it seems that that the market has been more sort of widespread in its growth. So how is your how do you see the role of lab grown melee in relation to the natural diamond market, which I think is facing somewhat of a challenge at the moment in the melee space with the bifurcation of Russian goods that are sanctioned at the moment, and we know El Rosa is a strong producer of smaller goods, and so there is this potential shortage of smaller natural goods, and how does that affect the lab grown small goods that are potentially in the market?
Okay, well, that was a pretty complicated question. I thought we were going to give all the hard questions to Avi.
We can divert back to Avi if you like.
Okay. Well, first of all, two things I would respond to that. transparency, chain of custody integrity, and overall honesty is critical in the lab-grown space as it is in the mine diamond space. Every grower, every miner, every retailer, every wholesaler needs to put those words as the first things on their lips when dealing with consumers and their customers, and they need to back them up with third-party verification to prove that they are high integrity. That goes without saying in my book. Secondly, there has not really been a cannibalization of the mine diamond business during this explosion of the lab-grown market. In fact, most site holders will tell you that their business has really prospered during this time as well. We might ask ourselves why that is. I have a theory that the lab-grown revolution has actually expanded the consumer pie with a new generation of consumer that has come into stores and bought lab-grown, but also bought mine diamonds. They've seen the choice, they've bought both, and everybody is selling product over the last few years and making money doing it. So I don't see the cannibalization issue taking hold yet, and I don't think people should be too concerned about that just yet, because again, we're at the infancy of this market. As far as MVEYE goes, there are a lot of factors driving the switch to lab-grown MVEYE, and Amish is correct that many growers are now trying to grow CVD rough specifically for MVEYE, CVD MVEYE, not HPHT MVEYE, because it is in peak demand and the price is going higher, and it's a much better quality, my opinion, than mine diamond MVEYE can provide. It's a better look, it's a more consistent look. Again, it's much more value for the consumer, and that the designers of the world, the larger jewelry manufacturers of the world, they don't just want to do bridal, and the stores just don't want to carry only bridal. They want fine fashion for self-purchasing female. It's a huge consumer demographic that they need to satisfy. In order to do that, they need quality CVD lab-grown MVEYE on a consistent basis. And that is where the demand is right now. And it's pretty expensive to get, and it's pretty hard to get. And if you have a supplier for it, you should lock it up right now. As far as the Russian embargo and how that is played in, that's a very deep subject. And I think I'm going to leave that to Avi or another webinar to answer.
Yeah, I think you're right, and we don't need to get into the geopolitics of things. Nick, I would like to hear from you on the MVEYE point, and because Lightbox goes down to I think 10 pointers, right?
Yeah, I think 7.5 is usually what we produce. We're mostly focused on larger sizes. I mean, that's kind of where the core of our demand sits. And certainly in our experience, the benefit for our systems anyway in terms of CVD is towards producing the larger stone sizes, and that's kind of where.
It would also seem economically more viable to focus on the larger stones. If a grower has a rough crystal and needs to decide what to do with it, and maybe I'm exposing my misunderstanding of how it all works on the technical side of things, but Nick, I would think it makes sense for them to use that for a larger stone, unless they make MVEYE their business.
Yeah, that's typically certainly been our experience. That you're at least in our
right.
case better off growing a larger stone. I actually would like to pick up on something that Marty raised there, because I think it's a fascinating point and kind of comes to perhaps the heart of this webinar, which is the question of cannibalization versus incremental market opportunity. And I'm very interested in your comments there, Marty, because it's certainly been what we've experienced with our own sales and with retail, but it does seem to be increasing increasing evidence and increasing data that actually this introduction of lab-grown product is good and good for the industry as a whole, because it grows the size of the pie. And there is an enormous opportunity there around new customers, so people who weren't otherwise shopping for natural diamond, perhaps were a younger demographic or didn't yet have the disposable income, or are just purchasing it more frequently. So you've got opportunity there to go and make repeat purchases, more frequent purchases. And I think that is something quite interesting to explore about where this goes and what this means for the industry in the future and what the possibility is. So the sort of perhaps the previous argument that people were framing this as natural diamond versus lab grown is not really the right way to look at it. It's about what is the opportunity for lab grown to grow the size of this market and to make it a much bigger opportunity for everybody, producers, retailers, and at the end of the day, customers as well.
I would like to.
Amen, and I'm glad that we have that on record that Nick said that.
Well, I would like to respond to that. Before I do so, we are on the hour mark, and just to the audience in the webinar, we are going to go over time. We are going to go on for probably another half an hour, and maybe address the questions at 20 past the hour. So if you do need to leave the webinar, by all means, if you have other things to do, please do so. This will be available. There will be a recording on the Rapaport website on diamonds.net and on YouTube afterwards, and we will send that out. So don't feel like you're missing out on this this fascinating discussion. I would like to take the intentional view of being the devil's advocate here, because I think we are coming out of a boom year in 2021 for the whole industry. That both natural and lab grown really had a wonderful time in the last year, and so I'm not sure if it's a fair indicator that there is lab grown contributing to growing the pie as a whole. And I do struggle with this point, because if a consumer comes into the store, the retailer has the choice to offer him lab grown or natural, and that's just how the sales pitch goes. And so naturally, I think that would result in a consumer buying the lab grown product instead of the natural product. And so Amish, I think maybe this is a question for you, through your brand, what, how does this develop going forward? Because I don't think we can gauge that lack of cannibalization in 2021 from the 2021 experience. How do you see this moving forward in the future?
I mean, you're absolutely right. I think one of the things, it's twofold here, is there cannibalization? I think it's more about consumer choice. We all know that if he or she are together, they come in to buy an engagement ring, they're not buying 2 rings. They're buying one of the two. Either they're buying an earth mine diamond or they're buying a lab-grown diamond. The growth of the category that is playing in a few $1 billion today, and stores that are carrying lab-grown, if you look at data by units, 1/3 of their sales and about 15% by value is lab-grown today. When you look at the data for the first 6 months of 2022, and especially when you get into a bridal month of May, the mine diamond sales for bridals were actually down double-digit, while lab-grown has grown. Of course, it's a smaller category, so the percentage-wise, it looks much bigger. Because at the end of the day, it depends on if you look at a cannibalization, but yes, I would have to say the consumer is making a choice. It's going to buy 1 engagement ring, not 2. When we talk about the overall growth of the diamond industry, you're going to have that, because let's take an example of diamond bracelets. Consumers that would have never been able to afford one now can buy one. So you're going to potentially have that additional sale. You're also opening, lab-grown diamonds is opening the fine jewelry category to a demographic that was purely seeing diamond jewelry as an aspiration. Our whole focus, when we see from our brand, from day one was making aspirations affordable. We were democratizing luxury. So it was not only offering a larger and a more beautiful diamond for the same price, but for the customer who couldn't afford, was now moving from a gemstone to a diamond. So that's that incremental sale for the category. But that customer who was spending $7,000 on a mine diamond now was taking a 2-carat home. So both were happening concurrently. As time passes, the way I see it for our brand is that, yes, our family's in the mine diamond business. We have that division. We have Earth Mine. What is happening is that the consumer, and you're still in that stage where the growth is still happening, you're going to see a wider market space. So there is bigger consumption of fine jewelry, but at the end, it's going to have its own space. They're both going to have their own market share. And we see this, there is a very healthy Earth Mine diamond bridal business. Of course, it has shrunk in certain areas. So the PK areas of goods and those bridals and those solitaires are starting to get weaker. Forget the supply areas and issues and that. It's just getting weaker. The under $3,000, $4,000 mine diamond category. That is being affected heavily by the lab-grown diamond category, that the $1,500 to $3,500, $4,000 solitaires and bridals in America, which is a big, huge chunk when we look by units and dollars, is being converted to lab-grown. This is a fact. In the few thousand stores in America that the product is sold, this is a fact. We see it from our brand perspective, the same scenario. So that conversion is going to happen. And you're over a period, it's the consumer that's going to decide the balance. And then you have the part, we can't forget that you have a very strong movement. We're coming from a strong year, but we're also looking in our face as a recession. So with gas at $7 in New York and milk and where every consumable is, the economically conscious consumer is also going to look at, price points have changed. I talk to retailers who tell me that the price points in Earth Mine have moved in certain areas out of their budgets for the consumers who used to have a budget. These retailers who never brought lab grown are now starting to bring lab grown in their stores. And one thing I've always said during my trainings, once a lab grown customer is always a lab grown customer. And I'm saying this with 6 years of on ground of training hundreds of salespeople in different countries, because the customer that bought a beautiful 2-carat pair of earrings from Altr or a beautiful bridal with a 2-carat center is not going down and buying an Earth Mine, which is half the size, for much more money. So this is what we're seeing as a true info from the ground level.
Well, I was thinking as you mentioned, and then a comment popped up from the chat, which reinforced my thought, is that my original reaction to lab grown developing as a market, that it might be an entry point for natural diamonds. That and it's never been marketed as such, but why not have a customer come in and say, start with the lab grown and move on to, and your next purchase will be such. Your experience, Amish, suggests differently. I think maybe different retailers might have different experiences, but your comments also made me think of a question that I think might be interesting to hear from each of the panelists, and that is, what differentiates a lab grown diamond from a natural diamond in your experience? It sounds like, Amish, and we'll start with you, that it is a price point play, that it gives a bigger stone, for example, for the same budget. But I'll let you speak. What differentiates lab grown from natural, that a consumer should choose it over a natural diamond?
So I wouldn't say should, I would say when I look at a consumer's reasons, a very small percentage has the whole environmental and social thought process in their mind, which is completely separate, where they don't want something mined. On the bigger scale, I would say 80% of consumers that are buying lab-grown diamonds are leaning because of size. That is the biggest reason they have converted, that for the budget they have, they're getting a larger and a higher quality diamond Today, where the average median price ranges of an average means for a customer is between $4,000 and $5,000 on a mass level, what do you get in a mine? You can barely hit a 1 carat diamond of any quality. In a lab grown, you get a much larger diamond. And that is by far the biggest reason that the conversion is happening. There's a lot of other smaller parts, but this one takes it home.
Marty, what is your impression, or what would your answer be to that question of differentiating lab grown from natural?
So in our research, we test this question all the time. We call them the value drivers of the purchase, and value drivers are known to all of us. They include price, which is obviously important. They include packaging. They include sustainability. They include chain of custody, and they include what we call the size to value equation. Now, a lot of these value drivers are low percentages, but a number of them capture consumers' research attention to get them into the store, get them to the website. At the end of the day, when they're at the counter, they want to see third-party credibility in terms of sustainability, especially if they're in the 25 to 40-year-old demographic. They want to know that the chain of custody is transparent and verifiable. But at the end of the day, if the choice is being shown to them for their $5,000 budget for their engagement ring, they're going to see a 1 carat mine diamond, EV color and VS1 quality, and they're going to see 1 carat and a third lab grown diamond of the same or better quality. The consumer today, 7 out of 10 times will choose the larger diamond. And that ultimately becomes the biggest story that Beryl Raff herself at the Dubai Diamond Conference clearly delineated. They're selling 50 times more 2 carat diamonds in lab than they are in mine. 2 carat lab is the new 1 carat mine diamond. So Amish is spot on there. It's one of the value drivers. It's as important as price at this point, because no retailer is reducing their price when a consumer comes in with a budget, and every consumer comes in with a budget.
I would like to get back to that pricing point that you both made, but I would like to also give Avi and Nick a chance to respond to this question. Avi, we'll start with you. Do you have any thoughts on this issue?
Well, I think both Marty and Amish answered it very well. It starts with value. People have budgets and they want to fit the best they can get for their budgets. So lab grown is giving them a great option. But seeing it from a lab side, we are seeing that natural diamonds are still holding their own. In some cases, some areas we're seeing a lot more pieces coming in for natural diamonds. So it's spurring a consumer to really decide what they want, right? And it's their own internal choice. A lot of factors on the lab grown, how it's grown. People want to make sure that they're grown in a healthy, sustainable way. Natural diamonds, people are just in love with the whole mystique of it. You know, it's just a choice. It's hard to say from my side what would be that choice. I think the guys covered it well, but yeah, I think it starts with value.
Okay, Nick, and I think this is probably I left you for last because I think again Lightbox has approached it in a very different way. The growth of the lab grown market. So how, in your eyes, what differentiates lab grown as a category from a natural diamond product?
Yeah, and this is again, probably one of those fundamental questions, and it's a space where I have my own personal views. I come from a natural diamond background, and I worked for many years in the mines and saw a lot of natural diamond, a lot of rough natural diamond. My personal perspective, that's a very, very beautiful product. You're looking at something which is, particularly on the high quality, larger natural diamonds, they're unique. If you've seen them, you know what you've seen, that you're looking at something that is exceptional and a gem. At the same time, I work in the lab-grown space, and I can appreciate the incredible technology that goes into crafting this product. It is really high tech. It is really cool. But these are fundamentally different things. Certainly in my view, you've got one thing, which is one product, which, natural diamond, high quality natural diamond. You're talking about a gemstone that you go to the ends of the earth to find. In the case of high quality natural diamonds, they're genuinely very rare, only becoming rarer. They're not going to be more of them produced in the future. And on the other side, you've got lab grown, which offers a fantastic quality product. It's beautiful. It's affordable. You can make it en masse. But these things are fundamentally not the same thing. So I think it does come down to a personal choice. What is it that you're looking for? What is it that you're looking to buy? And I think as an industry, there's a bigger question about how you present this choice to the customers. That they're clear on what they're buying. And I think in many ways we'd be making a mistake to say that these are equivalent and exactly the same things. They're not. They have a very, very different journey to get there. They have a different spectrum in terms of the rarity, particularly on the 4Cs and the quality. And they've got a different perspective in the future, what they might be worth down the line. I think they're both fantastic products, but they are very different products, and it comes down to a consumer choice, an educated consumer choice at the end of the day.
Right. So that's sorry, Avi, did you want to respond to that?
No, just interesting what Nick ended about the an educated consumer choice. We're seeing the consumer is asking a lot of questions. So lab grown has also driven a lot of educational side to this whole part of the business. We're getting questions constantly about the makeup of the stones. They're also asking us, what should we choose? Why is one better than the other? Is one better than the other? The customer is asking questions. The consumer wants to know as well about the lab grown as opposed to the natural. So we've all kind of gone away from education for a long time, but we're seeing a very big push and a lot of requests coming to the labs on education. And it spurred us to also up our game on that end to give the customers their answers.
Thanks, Avi. Amish, did you also want to respond to that, to Nick's point?
I think the entire growth of the created diamond category is based on the education that has happened. There's really no marketing dollars that have been spent on a national or international level trying to grow the category. The organic growth that you're seeing in the category was purely education. Even just when I think our brand, we've trained over 1,500 salespeople in person in stores. And it's the education that has led this disruption to get to this point in terms of the consumer making a choice. So education has played the biggest role in the consumer making a choice towards the lab-grown diamonds. And that's very, very important to see that that's the core to this shift that everybody's seeing.
I would like to just ask one more raise one more topic, which is probably the big elephant in the room, and before we go to the questions from the audience, but and that is the question of value, and if the differentiator is value, and that you're getting a bigger stone, for example, for the same budget, it's essentially a pricing play. And we began this conversation, or a big part of our conversation was about the consistency of supply, and that lab grown has that ability to sort of hone in on the technology and ensure that that supply is controlled in a way, whereas what comes out of the ground determines what is produced in the natural diamond space, where it seems that as technology evolves, the supplier has more control of what is produced, and in order to meet the retail demand or the consumer demand that's out there. And so that, in my mind, suggests that there is this there will be, if it doesn't exist today, as technology evolves and improves, there will be this ability to raise production as the need arises. And so would that not pull the value down as supply rises when and when demand hits a plateau. And so that's the first question: is you know, how, when we talk about value, it's really talking about price, I think, Amish, and maybe you can respond to that, because I know this is your favorite topic. And secondly, should the industry not be disclosing that potential supply and price dynamic to the consumer as the market evolves?
So, as you said, this is my favorite topic. I think there is this part, you know, growing up in the business, you know, third generation, the one thing I never understood is, how were diamonds an investment? Diamonds are not an investment. You know, it's an excellent marketing that has been put together, and it's probably the most successful marketing of the century, and which has worked in the last 30 years, that people are made to believe that if you buy diamonds, values keep going up. Well, the value of a diamond is very different than the price of a diamond. You know, price is what you pay across the counter when you purchase something. Value of a diamond is what it represents, you know, and these are two very, very different things, because when we talk of diamonds from an investment perspective, that investment grade diamonds are barely 1 to 2% of probably the overall global production. You know, there's 20% that are going into gem, and out of 20, there's a very, very minuscule percentage that are actually investment grade diamonds. You know, PK diamonds are not investment grade diamonds. So that's the whole part. Yes, that we have told the consumer a story that has always been that diamonds are investment, and we talk about that, you know, over time values go up. You know, when you buy a diamond from, if diamonds really had a trading value or a commodity value, you should be able to buy from one place and sell it for another for almost similar price. Well, that doesn't happen. You buy for $1,000 at a place X, you go to another jeweler, they'll offer you 30 cents to $1, because what you paid across the counter was a price. So I think this entire myth of rarity, this entire myth of value equal to price, I don't stand for it, because I think it's very, very clear, and the consumer today is also pretty clear. There are beautiful earth mine diamonds, and there are beautiful lab-grown diamonds, and they both have, you know, a price for it. Now, because again, if price equaled to value, then why do you pay more for the same product or similar, almost similar gemologically, almost similar, they're never exactly the same, from one store to the other? Because that's the price of their product and service and everything. So I think these consumer first is far more educated than before. And we have turned this into a value conversation from a price. Even the part about where people come back and upgrade diamonds. You know, it's one of the few industries in the luxury segment that actually has this. You know, you come back, you give back, and then you upgrade, because that's how you create a perceived higher value. And then lab-grown diamond, when it comes to the other part of pricing, is an open market pricing today. You know, it's not based on a table or a set table or a far more controlled pricing matrix. So over time, the technological improvement is going to have an impact, and that economy of volume and is going to be passed on to the consumer. So I think it's two very, very different things, value and price, to me.
Well, I think again, you make a number of points there. I think if we take the investment aspect of I think investment implies something a little different to what you know, investment is purely for a potential profit in the future, and I don't think that's the pure intention when someone buys a diamond. If they're buying a diamond engagement ring, it's because of what that diamond represents. It's there is an aspect of the rarity of the diamond, and in the De Beers language, the preciousness of the stone. But the investment aspect that I think you're implying suggests should maybe replaced by the feeling that it will hold a certain value. And so, Marty, if you just look at, if we take them as two separate products and two separate segments of the market and look at lab grown from a supply demand point of view, looking in the long term, what is the outlook in terms of if price is determined by the supply demand equation?
Sorry, I just want to comment on something Amish said, and I am in agreement 100% with everything he said except for this point. The myth of the greatest marketing story ever told was not 30 years ago, and it was not even in this century. It began in the last century in 1938, when the Oppenheimer family hooked up with NW Ayers to first tell the story that became the greatest marketing story ever told. An incredibly powerful and successful story that drove the jewelry industry in the US and eventually globally at the independent and then major retail level. And essentially had every retailer on the planet telling the story of the scarcity and rarity of mined diamonds, and despite what Avi says, the investment value of those diamonds. There is no value other in a diamond, mined or lab grown, or anything else we purchase as a consumer, other than the emotional value that the giver and the receiver embody it with. And that's a pure and simple fact. If you want investments, you go to Charles Schwab. We're not in the investment business, we're in the love business. We sell love, a physical manifestation of love that a husband and a wife, a partner and a partner, a friend and a family member can give to each other. That's what we sell. And we put all of our blood, sweat, and tears into growing it or mining it and creating an incredible piece of jewelry, whether it's $99 at JCPenney or millions of dollars at Graf. Doesn't matter. It's the same emotional content. Has nothing to do with the dollar value or the investment value of the product. And the industry should start being honest with themselves about this if they want to prosper with the next generation of consumer.
Right, but to look at it on a more sort of dry and cold, taking the emotion out of it, all products are a subject of supply and demand, and maybe I'm looking at it at a wholesale level more than a retail level.
Avi, why should we take the emotion out of a product that is purely emotion?
All emotions.
That's what everybody is selling. That's what everybody is buying.
Feel good.
Right, but that's not setting the price of the diamond.
Why are you with Rapaport so concerned with setting the price? Why is everything about this conversation? Why is everything about this conversation turning to setting the price?
Because that's part of the value. That's part of the that's part of what contributes to the value.
That's not the way any other industry works. You get a supplier that makes a product, they set the price. If there's a willing buyer, they buy it. There's a willing buyer and a willing seller. The price has nothing to do with the retail level. The retailers are not discounting 99 back off for lab-grown diamonds. They are not reducing the budget that the consumers come in to spend. They are making whopping margins on lab-grown, and they should continue to do that by offering this choice and educating the consumer about this product.
Right. Just when this webinar is getting juicy, we need to turn to the participants. But I would make the point that the retailers are maybe doing the consumers a disservice by maintaining those high margins. And so,
that's absolute. What are you in? Are you in the monopoly business now, Avi? You should set the price. You've heard earlier you said we should share the technology with each other, and now you're saying we should share the prices and tell the retailers to stop making margin.
No, I'm saying if your cost and with this I'll turn to Nick to maybe have the final say on this. But if your cost is declining and the supply is rising, then
that's not capitalism. Capitalism is a willing buyer and a willing seller. If there's emotion and design and skill in your product, just because one component of the product is declining in price doesn't mean the margin has to go away for all the blood, sweat, and tears the retailer puts into it. Retailers don't sell diamonds; they sell diamond jewelry with love in them.
Yeah.
And also, Avi, why does the cost of any product have to have direct relationship with a set margin to sell? My cost can keep going down. I can still raise the price if my brand is desirable or my product's desirable. That has no direct relationship. Not necessarily always. A product can have a cost, but the retail price of that product is determined, exactly how Marty's saying, by the desire for the consumer to experience the product or own the product. The whole pride of ownership of luxury brands, that's where it comes from. It means you don't connect the cost and sell.
But as supply increases, more retailers are going to have that same offering.
Doesn't matter.
It's a component. It's a component in the jewelry. Would you tell LVMH to reduce the price of their handbags because they got the handle cheaper?
Yeah,
no, I'm mixing cost and supply, and maybe Nick, I'll turn to you to maybe give the Lightbox approach, because I think it again is a little different to the rest of the lab grown market.
Yeah, I mean a lot of things to touch on there. One is, clearly within the lab grown space, we've seen movements in terms of pricing both at wholesale and at retail, and that journey is not yet done. This is reflective of increasing production coming through, but also the technology getting better. So the two things that we spoke about earlier around quality moving upwards will also be reflected in terms of where the wholesale pricing is. And I think if we look back since 2018, we've had something like a 74% decline in the wholesale prices for lab grown diamonds and about 50% at retail. And absolutely, retailers should be making healthy margins on any product that they sell, and that's how they stay in business. But over time, you will see this is a technological product. The cost of manufacture is going to go down. So for generic lab grown diamond product, it will become more affordable in the future, and that's certainly where we see it going. And I think a point raised by Amish is then what is the role of brands within this space? It is to carve out a value offering to your customer base that allows you to sell your unique perspective on it, and avoid you just become a generic product within that space. But there's a further point, I think, and unfortunately we haven't really gotten onto the question of grading, despite being sponsored here by the IGI, which is this presentation of equivalency. So when you present two stones side by side, a lab grown and a natural, that carry effectively the same 4C grading, I think you do have this risk here of confusing a customer where you're trying to base a pricing for a lab grown product off the pricing for a natural product on the basis that they carry the same 4Cs. Those two products have a very different distribution in terms of their rarity. We said earlier, already you're looking at probably 40 or 50% of the world's production of lab grown is moving up into that DEF VVS type space, and over time that's only going to increase as the technology gets better. I wouldn't be surprised in the future, a couple of years down the line, we're going to see it's all going to be top end quality for lab grown. Why would you go out of your way to produce lower quality lab grown unless you've got a significant cost advantage in doing so? And increasingly, you're just going to have that disassociation between the two. So, Lightbox's approach has always been, our costs are linear, our pricing is flat because it's cost of production plus margin, and that's how we sell it. I think trying to justify your cost off the cost of another product, which is driven by a rarity matrix, is actually a bit misleading to the customer and isn't really the right approach in the long term, at least in my perspective.
This I agree with 100%, Nick. We should not be pricing lab grown off the wrap price report. It should be its own separate matrix, and it should not even be a matrix that's disclosed. Every grower should be able to set any price they want. If you don't like the product and you don't like the quality, you go somewhere else. As you say, there's plenty of growers. If you think they're all the same, you can get the same product everywhere. But they're not all the same. So fortunately, everybody has a choice of product, and each of those growers should be pricing it according to their cost, their profit margin, their brand, their quality, their transparency, their credibility, their third-party certification, and let the market fall where it may.
Avi, what were in that scenario? What is the role of the grading lab? Does lab grow need a grading report?
Well, we're getting the pull from the customers. Customers want to know what they're buying. What is that color? What is that clarity? What are the attributes to the stone? So as long as we keep getting that, we'll keep giving our results. Transparency, it's about transparency. They want to know what they're buying. Once and if we get to that level of all stones being F+, VVS+, there will probably be a different approach. Currently, we are where we are.
Yeah, and sorry, just to interject, I mean, I think a lot of that is going to come down to where we end up, and it's going to be around the producers. You know, you don't have a situation where every BMW that runs off the line has to be sent away to an individual certification lab. You know, you've got to get to the point where manufacturing is controlled, manufacturing quality control is there. That the product that we sell and classify as an E is, you know, guaranteed to that level that the customer can trust it. And I think absolutely there's a space for third-party validation, but I'm not so sure that in the future we'll be sending each individual stone across to a grading lab to have a trained gemologist look at every stone. I think it's going to come more down to manufacturing quality control, because you're going to have some very bored graders in the future who are going to see the same stone again and again and again.
We're already seeing same stones come around, so that's happening already. Time will tell for everything, I think, but we've got a long way to go, for sure.
Well, gentlemen, thank you very much. And as I said, we got to the heated part of the discussion. There are many questions. I actually don't know where to start, and there's also seems to be a very engaged chat discussion, which I think we will maybe make available, even if it's anonymously, on the to our panelists, and also to on when we cover this on our website. So thank you everyone for that. I'm trying to think how I should approach these questions. There's so many, and do so in a timely manner. So let's see. I think there are quite a few questions about the resale value of the potential resale value, and I think we have touched on that point. Amish making the point that that there's very, you know, that even it's not that even in natural diamonds the resale loses value at a certain time. I think there are platforms on that point, and I stand for correction, which are improving the resale potential for consumers, and that, I think as that develops, that question will be a more relevant one. But it again comes into the question of value and how you perceive value.
Just quick 30-second, I'll give in. I think the value when we come to diamonds, and you know the resale value that they talk about, I think it's very much to do, and somebody said this very interestingly a while ago. He said you can go to Tiffany's and buy a 5-carat diamond ring, and it's worth maybe $100,000, $200,000. What happens when you take the diamond out of the Tiffany ring and you try to sell the diamond? So the resale value has a lot to do with the finished product and the branding and the story behind it. Diamond is just a component. So that has to be kept very strongly in mind.
It's fair point. I'll leave it at that. But I do think that the brand obviously does hold a large part of the value, but the center stone also, I think in that particular example, does so too. I think there is an interesting question here about where demand for lab grown is. And maybe Avi, you can comment on this, because when we think of the lab grown markets, I think we tend to think about of the US as that core sort of consumer as it is for natural, but what are we seeing in terms of the growth in demand in Asia and Europe for lab-grown diamonds?
So all of our labs are starting to see a pickup across the world for lab-grown. There's no doubt. It's penetrating in every market. So it's growing day by day.
And Nick, is that something that Lightbox is looking at in terms of the markets that you're operating in?
Yes, yeah, no, absolutely. I mean, there's no doubt that the US is probably ahead of the rest of the world in terms of overall level of acceptance and availability, but the rest of the world is catching up. This is not a localized thing. Yeah.
Okay. Again, I'm just struggling here to pick out the questions that haven't been discussed, and there's quite a series of them. So So I think when I think about and this is just picking out from one of the questions here, there've been certain sort of milestone events in the last few years that have shifted the conversation in the about lab-grown diamonds. The one being the introduction of Lightbox, the other being the FTC ruling, and I think a more recent one was the splash made by Pandora about only selling lab-grown or shifting from, although it had a very small offering of natural diamonds, but really making the point about the environmental aspect of lab-grown diamonds. And I worry about that marketing angle because I do think that there's certain standards within the lab-grown space that also need to be met, and that's not highlighted enough. And also, I think it is a disservice to the natural diamond industry, which has really done a lot and become much more aware about the environmental impact of its operations and improved the relationship it has with sustainability, etc., and come a long way. So, but you still see this marketing ploy, and I think Amish, you mentioned, you hinted to it a bit earlier, but are we seeing lab-grown companies and retailers shifting away from that environmental messaging? Because in that the marketing of it has marketing of lab-grown diamonds changed in the last few years?
So when we talk about the bigger mass marketing on lab-grown, there's been a lot of greenwashing. I think that's been the biggest part, is greenwashing in terms of the whole lab-grown diamond marketing, the whole green thing without understanding what it is. So that's the bigger part. But when we talk about the environmental steps that are being taken at the lab-grown category level, I think there is a very progressive advancement that is happening. You're starting to see labs that are completely going solar, using 100% renewable energy. You're seeing companies that are moving towards a complete carbon neutrality. And that is something that's you're going to see that more. And that effort is being made by anybody who's looking to talk to the consumer, looking in their eye, either as a brand or distinguishing themselves from the market space. This is something that for the mine category, it's a whole different conversation, because no matter what you do, you're still going to make a hole in the earth. So I think that's a separate conversation. I don't want to speak for them. But from the mine diamond category, I can say that when we talk to retailers, they do not want to get involved in environmental marketing. And I don't think that's actually even smart. I think being in the diamond category, we have to think about the growth of the diamond category. It's not about lab-grown diamond growth. That's the one thing we didn't touch today. At the end of the day, the two categories need to work together to grow the overall space. Both are going to have their shares. But when you start throwing dirt on each other from an environmental conversation, what is going to happen is your hands are dirty and you're going to try to make somebody else. It's not worked, and it's not working. So when you talk to any smart retailer, which is almost, if you look at all the retail marketing or even the little advertising that's out there, you're going to see it more this year. They are staying away from the environmental conversation. Interestingly, this entire environmental conversation is within the trade. You know, those 200, 400, 600 wholesalers that like making the company color green and, you know, trying to put up all that conversation. But when you look at smart retail marketing, it is not a conversation. Yes, there are brands that are positioning themselves as key ambassadors for a carbon neutral product, and that's going to evolve. You're going to have your tier A brands, like we've used recycled gold from day one, you know, so you work on that. We move to solar. Yes, that is, so as a brand, having solar energy, working towards carbon neutrality on an international level, using the same standards used by Forbes 500 companies, those are going to be requirements. Making sure your gold is recycled is going to be a requirement. But is it a key marketing? No.
Right. Okay. Well, that's good to hear, and I think that we have noticed that shift as well. That although just in some of the corporate names, there is still that implication, which maybe is a legacy issue. I think let's just finish on a final point, and again, similarly to the chat, I'll make the questions available to the panelists and maybe try and address them in our coverage of this webinar. I'll keep putting more work on my plate, but that's a personal separate issue. I think maybe, you know, Amish, you hinted to this, that, you know, should both industries be looking at this as one industry product, or and the answer to that, I think it will evolve over time, how the different industries evolve, if there will be a, you know, to what extent there will be the segmentation, and I think there will be there has to be segmentation, because in my personal opinion, they are a different product, and they do tell a different story, for better or for worse. And you may argue with that, given that we're on a panel of lab-grown producers and marketers. But how do you see the two? I guess let's maybe do a quick fire round of how we see the two products playing off against each other, if they're going to be competing products or if they're going to be complementary, and maybe just give a few sentences each of you on that point. So Avi, let's start with you.
Okay. I think there's a little bit of both to it. They're both competitive. They're competing against each other, but, you know, all the parts make up the whole in our industry. So we're bringing diamonds together here. We're giving consumers an option at the end of the day on what to buy. I think overall, it's great for the whole industry. You know, I said before, the lab grown came in and kind of awakened a little bit, right? It kind of pushed the whole industry a little bit more. Just a quick touch to the environmental part of it. Yes, marketing aside, but it has spurred the industry to kind of look at themselves again to see how we can become more greener, more healthier. How do we contribute to everything? You know, we've always kind of stood to the side on this, I think, in most parts, but now it's at the forefront. So lab grown has kind of pushed us to kind of look at things in a different way. Bringing in new consumers, a new thinking. So I'm happy that it has. It's spurred the natural side to kind of step up its game. The lab grown has a lot more to go. We're still in the middle innings, as we said. So I think the future is bright for both sides.
I think that's a great point. I think it is interesting, at least, that you had this this parallel growth of lab grown and that messaging about the environmental issue, and at the same time the natural industry improving its sustainability credentials. Not that that was exclusively the driver, but I think maybe it did play a role. Nick, how do you see the two markets evolving together?
Yeah, I mean, I think as we sort of mentioned during the course of this webinar, a lot of fundamentally different forces at play. A lot of separate issues. I think that each side probably face. I think there's a broader question there around you know, how does the lab grown diamond and lab grown diamond producers present ourselves, what is the sort of level of industry accountability and transparency and all of that, and it links into this question of environment, but many other issues, that impact, a manufacturing product like we have, that needs some attention. I think, particularly on the environment side, it's clear that this is a highly energy intensive product, and it's about how you act responsibly within that, and use the right renewable energy sources and all the rest of it.
Okay, thanks for that, Nick. Amish, what are your thoughts on this question?
I think my thought is Altr always focused on enabling the right to choice for the consumer. The success of any industry is how the consumer perceives it to be and desires the product or experiences. I think the two categories will compete for their own market share, which is very fair. So the earth mine producers, or be the lab-grown producers, the brands, they will compete for market share within the industry as a category. And then within the category, you'll have brands and you'll have generics, just like every industry. I believe that the categories, while they compete for the space within the industry, is a very healthy thing. The need for these categories to work together as an industry to increase the desire for fine jewelry is one of the most important things. I think putting out, it's almost negative or detrimental to the industry as a whole when the categories actually confuse the consumer. And I think that's the one thing I would say. Let's stop confusing the consumer, give them the education, awareness, and let them make the decision.
Fair enough, thank you. I won't respond to that for time constraints, but we will give the final word to Marty. Marty, what are your thoughts?
My final thoughts are twofold. One, if there's a claim to be made about sustainability or eco-friendliness, you have to present a third-party accreditation of that claim. It's not enough to just make the claim yourself. Many in the lab-grown industry have used a third-party accrediting body that is world-renowned to undergo substantive audits of their facilities and their custody chain for all of their product. The mine diamond industry has refused to accept that body. That audit was offered to both the mine and the lab-grown space, and only the lab-grown diamond growers accepted it and embraced it, and a number of them have succeeded with it. Consumers are paying premium for third-party verifiable sustainability audits and chain of custody in all consumer goods, and the diamond business is no exception. But the second point I would make is we're not competing against each other. We do have to stop confusing the consumer. We're competing against Apple. We're competing against fashion. We're competing against automobiles. We're competing against everybody else that is far outspending us in the discretionary spend category. We're in the love business. And when we get consumers into the store to buy something that expresses their love, we can show them a range of different products. We can show them lab grown, we can show them mine, we can show them color, we can show them recycled gold, cultured pearls, natural pearls. We can show them all of that. But the sooner we start talking as the love business and not the mine versus the lab grown business, the more success we're going to have with the very important next gen consumer that is going to be the dominant demographic spending force for the next 40 to 50 years.
Fair point. Thank you, Marty. And I think just on that third-party auditing and supply chain verification issue, I think it is important that the Responsible Jewelry Council is working on a standard for lab-grown diamonds, and I think that will be an important step. I understand the organization that you were referring to, and there were issues with the sourcing source verification of natural diamonds within that organization. But each segment has its own challenges, and I think that RJC verification will be an important moment for the lab-grown industry. Anyway, there's so much more we could discuss. It's been a good 2-hour discussion, and I've thoroughly enjoyed it. It lived up to my expectations. So I want to thank you all, Marty, Avi, Nick, and Amish, for your contributions. I really appreciate it. I appreciate the time that you've given us and your knowledge. I want to thank all our participants in the audience for giving your time and sticking around. As I said, this will be available online as a recording in the next week or two. And I want to thank IGI again for sponsoring the webinar and for the next 2 of the series that will take place in September and October, if I'm not mistaken, but keep an eye out for that. So thanks everyone, and we'll see you again next time. Take care.
Thank you.
Bye-bye.
Thank you. Thank you.